Markets around the world were pretty strong, with the world index up 5%, which is a very, very significant rise in a month. The US S&P 500 index was up 7%, which is an extraordinary month. This was accompanied or partly attributable to higher commodity prices. The energy sector was very strong. You've had a big rise in crude oil, up 7.5%. Copper is up 10%. You had a bit of an energy crisis going on in parts of the world where China banned Australia's coal, is leading to some high electricity prices in China. They've got coal shortages. You've got a natural gas shortage in Europe, where they've been phasing out fossil fuels and closing down some nuclear power, and then the wind didn't blow, and so you've had very high electricity prices, and that's pushed up the oil price as well. The Australian market didn't participate in all the excitement overseas, with our market being basically flat. And unfortunately, the Australian share fund was about 0.5% behind that. So, by contrast, a lot of moving parts, of course, in the market, but a fairly flat market here in Australia. On the downside, we had a couple of stocks that had share price falls for reasons that we see as very short term. One was Brambles. They had their investor day. They talked about investing for the future, building their digital capability. The market didn't like it because if you invest for the future, sometimes it's jam tomorrow rather than jam today, and the market is very short-term orientated, always wanting jam today. But we do believe the strategy will pay benefits, and they wouldn't be investing for the future if they didn't expect a return. Another one to suffer was Horizon, that has agreed to buy One Rail, which is the railway really between Adelaide and Darwin, and the freight traffic associated with that. And we think that that will be a good acquisition, although it may take some time for the market to appreciate that. On the plus side, a number of our stocks did do very well. Orica, having been weak, has rebounded as people start to see the benefits that will accrue as mining comes back, and because of their wireless blasting. CSL had a good month. And so we had some good shares on the other side of the ledger. We live in really fairly extraordinary times. Governments have been spending as though there's a magic money tree, because they don't have the funds to support that spending. And then the central banks have been putting interest rates at zero, which has caused asset price bubbles. And they keep saying, oh, they don't want to raise interest rates, even though house prices are going crazy. It's a very unusual backdrop, with asset prices going up, but economies being supported by government spending and so forth. And we do believe in such an environment, it pays to continue to be defensive, to focus on quality. That's what IML is known for, and that's what we continue to believe will be in the best interests of our investors.